Hello and welcome to episode 58 of Prosperity by the Pint. I'm your host, Brice Carter, certified financial planner, chartered financial consultant, certified investment management analyst, and self-proclaimed millennial money expert. This is a podcast where we talk about money, investing, business, and life success, all while having a cold beer. This is the quarantine edition, a little bit different setup today, but we're making the best of a bad situation. Hopefully I'll be back in my normal studio next week. The beer this week, I'm really excited about this because we're getting back to our roots with some craft Michigan beer. This is from ROAK Brewing Company. It is the Blow Your Face Out Double IPA. It is a whopping 10.5% alcohol and a IBUs of 100. I think I need this during this dystopian nightmare that we're all living in. There's a bottle if you guys want to see it. Cheers. Ooh, that's lovely, but strong. So this week, I wanted to talk about the other market story. So I actually, and that is the collapse in oil prices. So if you didn't see, this past Tuesday would have been the Tuesday the 21st, oil went negative. And that's just mind-blowing. The oil futures went negative. And I had friends calling and texting me and clients, and even my brother, who's a financial advisor with us, called me and said, what in the hell is going on with oil? And it's like, okay, well, I don't know. But no, I actually wrote about this a couple weeks ago before it really blew up. And it's on our website, fsgmichigan.com, blog, insights. And what I wrote was Market Update, Oil Prices, the other market story. And what I had said was, while the world's gripped with news of coronaviruses and we're obsessed with testing, number of cases, and really concerned about that, the oil story had not been talked about nearly enough, which is understandable, right? We have a pandemic going on, people are dying. It is the story, right? But the oil story had been ignored. And so what's going on with oil is Russia and Saudi Arabia. Saudi Arabia is supposed to be an ally, and I'll more on that in a minute. We're engaging in essentially an oil price war, right? So they were refusing to cut production, and we're still continuing their production at levels and even ramping it up in certain cases, even though demand had turned down. So demand is lower for oil, gasoline products, obviously, right? We're all stuck at home. We're not driving around. Most of the airplanes in the country are shut down. Cruise liners, all that run on diesel fuel, are all basically sitting in a standstill, right? So demand for gas and oil products is way down. And they're engaging in a price war, causing a surplus in supply. So when you have a surplus of supply and a lack of demand, what happens? Prices go down. This is Economics 101. It's one of the things they actually taught us about finances in high school is basic economics, supply and demand theory, right? Supply and demand theory is playing out in an epic fashion when it comes to oil. So this was April 9th I wrote this, and it said, due to an escalating oil price war between Russia and Saudi Arabia, the price of oil has collapsed. This year alone, oil has plunged from nearly $70 a barrel to as low as $19 a barrel. Who would have thought it would have went to negative $38 a barrel in just 2 weeks from the time? So what was happening was Saudis were ramping up production and the Russians were ramping up production. Now, our oil that we drill for in the United States, a couple things, is I'm not an oil expert, but I do know a little bit about production. It's a dirty oil. It's more costly to refine, and many of our oil drilling rigs have to work substantially harder to get the oil than they do in places like Saudi Arabia. So most of our oil producers are not profitable when oil is below $40, $35 a barrel. Most of them, when a lot of these rigs came online just in the last several years, Trump administration opened up a lot more drilling, so on and so forth, they planned on $55 to $65 per barrel oil, and they can be profitable at that. But oil hovering in the 20s is terribly bad for American oil producers. They'll go bankrupt because either you shut down and you borrowed money to open these oil rigs, or you just continue to pump oil at a loss. And so you're losing money every time, every day that you're up and running. So anything below $35 a barrel, basically in the U.S. and Canadian oil fields, is a nightmare. They just can't operate that way. So it was really problematic, this oil price war, for us as American energy oil producers. We've worked really hard, the country has, to become not dependent on other countries for our gas and oil, right? I mean, it's a national security issue. And I don't know if you guys remember, but in the 2008-2009 financial crisis, we had the opposite problem. Gasoline prices were so high, and that kills the economy. So low gas prices help put money in our pockets, right? But if it gets too low, you're going to bankrupt the American energy producers, and then we have to rely on foreign oil again, which is problematic because OPEC used to just jerk us right around, right? So when we look at it and say oil below $35 a barrel is going to put U.S. and Canadian producers out of business, that's a problem for national security, for energy independence, for our economy as a whole. There's a lot of jobs on that. And then you start to look at the investor money that's tied up in this, right? Because banks and investors have lent money to the oil producers, and if they go belly up, they don't get the money back, right? So it has a snowball effect. Now, what I was saying in my article, and I put it more kindly in the written word than I'm going to say now, is Saudi Arabia is supposed to be our ally, even though they have a draconian, terrible human rights record on abuse of women and other groups that don't align with their conservative views. But they're supposed to be our ally, despite their terrible human rights record, right? They're supposed to be our ally, and they're bankrupting because of an oil price war with Russia. And I should make this point, that it costs the Saudis and the Russians less to produce a barrel of oil than it does us, okay? So they can sustain low oil prices for much, much longer, right? Because it costs them about $10 a barrel to produce. And so they're supposed to be our ally. I mean, we provide security forces for them. We sell them military equipment, et cetera, et cetera. Yet they're going to bankrupt our oil producers? That doesn't seem right. So I felt like that there was probably some leverage that we had that we could implement to get this oil price war to subside. And I was also concerned at the time of writing this, and I guess I still am, is how much of the market corrected or crash because of COVID-19 shutting down the economy. But what we can't know is if it crashed more than it otherwise would have if we had a healthy oil and energy market, right? So if we didn't have to worry about our oil producers going bankrupt, would we have crashed as far? I don't know, right? I mean, how can I know that? I do think that as we've seen, when we saw the oil price war take a step back and not be as intense for a minute, the market did recover some, but it was also getting good news on coronavirus too. So it's hard to say, but I believe, and I can't substantiate, but I believe that the oil price war made the market correction worse than it otherwise would have been. It doesn't mean it wouldn't have been there, right? We still have COVID, we still have economic shutdown, yada, yada. But I think that the oil price war made the crash worse than it otherwise would have been. So last week, and probably 2 weeks ago, by the time you read this or hear this, there was essentially a huge agreement made at OPEC Plus and between the Saudis and the Russians. They're going to cut production. Okay, so short term, problem solved. They're not an oil price war again. We should see things start to settle down a bit, right? Wrong. The problem is we still have plummeting demand. So what happens on Tuesday when oil prices went negative? First, how oil trades is you have futures, oil futures trade, that are allowing you to pay for a barrel of oil, or they trade in thousands, right? So if you see $35 a barrel, when you buy the futures contract, that's obligating you or giving you the right to buy 1,000 barrels of oil at $35 per barrel. So let me say that again. If oil futures are trading at $35 per barrel, you are buying basically a contract that allows you to buy 1,000 barrels of oil at $35. Okay. So oil went from trading at $70 a barrel roughly at the beginning of the year down to $19 at the time of my article. And then more recently, it went negative. So this is what was happening on Tuesday when oil went negative, is the futures were expiring, which means they won't be traded anymore. You'll be locked in at that price. They were expiring at the end of the day. Oil went from over the weekend, and this was Monday, not Tuesday. I keep saying Tuesday. Oil from over the weekend went from 19 to 18 to 11, and then throughout the day you had traders jumping in and saying, "Oh, this is silly. We're going to pick up this so we can make a quick profit on it." And then I think they really started to realize throughout the day, "Oh man, if I buy this and it expires at the end of the day, I'm obligated to take receipt of 1,000 barrels of oil." So they start getting on the phone with all the different storage facilities and saying, "Hey, am I going to be able to pay you to store my oil?" And the oil storage facilities were like, "No, we don't have any capacity." So what you had is a situation in which there is boats on their way from Saudi Arabia right now, completely full of oil, and there is no place for it to go. So all of a sudden on Monday, panic starts to sit in with these traders that are now holding these futures options, which are obligating them to take receipt of 1,000 barrels of oil, and they don't have anywhere to put it. All the storage facilities are full, and there's more supply coming, and the storage facilities are still full. So what ended up happening is oil ended up reaching negative $38 per barrel, which means if you bought it and held that future contract to its expiration, you would have gotten paid about $38,000 to take possession of 1,000 barrels of oil. So they'd have paid you $38,000 to take reception of 1,000 barrels of oil. But you're obligated to ship it, you're obligated to store it, and it doesn't exactly come in barrels, right? It comes in tankers. So all these traders that were buying this are now they were willing to pay people to take the oil from them, and they couldn't because there's nowhere for the oil to go. That is what happened to oil markets. The question is, beer break real quick. That's a good beer. Woo, strong though. The question is, that was the May oil futures. What will happen May 19th when the June oil futures expire? Because I don't know. I don't see demand rising substantially. There was a production cut, but still, if there's more oil available and nowhere to store it, could this happen again? I actually think it's really likely. I hope it doesn't. It just doesn't seem like a good thing for the economy to have negative oil prices. Believe me, they're not going to pay us to go fill up our vehicles at the pump anytime soon. They're not going to do that. But it just seems to me that this is a little bit asinine. I mean, like, how do we not have? How did we reach full capacity on the storage facilities so quickly? And that's what an oil price and a nationwide government lockdown will do for you. Is all of a sudden here we are, negative oil prices. I was talking to my wife about it, and I'm like, excuse me for the burp, but that's what happens when you drink beer on a podcast. I was talking to my wife about it. It's like, okay, we have a pretty big barn. Could we store 1,000 barrels of oil? I think I might be able to, but I don't have the barrels. I have no idea how to facilitate that. But so needless to say, I did not buy oil at negative $38, which would have been cool. Cool to have 1,000 barrels of oil in your possession. At some point, that's going to be an extremely profitable endeavor for somebody. Somebody made a lot of money, and some institutions, I'm almost certain that it was institutions, lost their heads on that trade the other day. Because most retail investors in a brokerage, you can't hold an options contract all the way up until it expires. So usually you have to sell it 2 days before expiration because they don't want to be obligated or liable for you to be obligated to take 1,000 barrels of oil. So most retail investment accounts don't allow you to do that, right? So it's most likely large institutions. It'll be really interesting to see how this plays out, though. I think that there's probably going to be some bankruptcies over this whole thing. I don't mean to smile about that. It's just, I'm sure it's some traders and financial institutions that are going to go belly up because of this. But at the end of the day, there was an agreement between OPEC Plus to start to cut production. Hopefully we see prices start to rise, right? Low oil prices are good to the economy, good for the economy to a certain point at which they are not, because then our oil industry fails, jobs fail, financial institutions fail, and people lose their jobs, right? So there you have it. So on the COVID update, looks like governors and the national and our federal government are looking at starting to open things up. The market is looking optimistic at it. Market's very forward-looking. Remember, I've said that in the past. It's likely that the market will heal far quicker than the economy will, right? Just because it's a forward-looking indicator. But we'll see. So I hope everybody's staying healthy out there. This COVID thing has been pretty nasty. It's had quite a run at my family too. A lot of family members did contract it. Everybody has had pretty mild symptoms so far. But I hope you at home are staying healthy. Cheers, and thanks for listening. Don't forget to subscribe, Spotify, YouTube, Facebook, Stitcher, wherever you listen. That's where we are. Cheers. The topics that I discuss in this podcast are meant to be general information and educational only. I'm not giving you specific advice because I don't know you personally. In order to give you specific advice, you should work with an advisor, someone that can learn your specific situation and give you advice that applies to you. If I talk about a specific security, please keep in mind I'm not recommending that security. And don't forget, investing involves risk. When you invest, there's always the possibility of losing capital, which is why you should consult with a qualified, licensed financial advisor prior to investing.